Welcome back. Now, Tiger Brand's second half performance has exceeded expectations, showing credible improvement against its first half. The group, which includes well-known brands such as Tastic, All Gold and Albany, attributes the positive turnaround to improvement initiatives such as value engineering, logistics and the conversion of cost savings. CEO Tjaart Kruger joins us now for a detailed analysis of those numbers. Tjaart, thanks so much for your time today. Now, it's been a year into that turnaround strategy that you announced last year. Just walk us through how the strategy has just reshaped the business, particularly how it then started gaining momentum in the second half of the year.
Yes, good day, darling, and thanks for being on the show. We have announced last year that there's a few things that we have to do to get Tiger back on track. The first thing that we started in December and concluded in March was to change the operating model. And as we've said, we've changed it to a decentralized operating model where we've appointed MDs into the different business units, which has got good levels of authority where they can make decisions quickly in an agile manner and execute those decisions. Included in that whole operating model change, and that's been concluded in March, by the way, and it's actually working quite well. We're very pleased with the way that the businesses have started operating from March onwards, and you can see the results in the second half that we've had some nice turnarounds in most of the businesses as a result mainly of changing that operating model. In addition to the other things that you've mentioned, let me talk about one or two of them. We have said that we must get our cost structures in place. We must get our cost structures to a level where we can compete with our brands against brands such as DOBs, dealer-owned brands, and our competitors. So we had to do a few things. We looked at recipes, we looked at packaging material, we looked at our factories, whether they're efficient or not, and make them more efficient. And we've done a lot of those things, and that drove a lot of the turnaround that you've seen. For instance, you won't find Black Cat peanut butter in glass anymore. The glass that you see now is just stock being sold out. We've been packing only in PET probably for the last 2 months, as an example. And mayonnaise is on its way, chutney will follow, and so we will carry on to drive all our brands into affordable propositions where our consumer can really select our brand because they prefer our brand and it is affordable. And the progress in the second half has been really good, and that's why you see the nice turnaround that we've described this morning.
Tjaart, now zooming in on your financial performance, margins edged higher, selling prices also increased, but volumes ticked lower. And I'm wondering if this has anything to do with Tiger Brand's products being premium brands and the trend we've been seeing where consumers are shopping down. We've seen retailers like ShopRite and Pick n Pay report strong sales of their private label brands outperforming these premium brands. What's your reading on that?
Yes, you've seen in the F24 financial year, the numbers that you saw this morning, the volume decline has in many cases been deliberate. So we had to reset a couple of our businesses. In many cases, we were in areas, in the bread business, for instance, we were in certain areas where it was very unprofitable. We had to pull out of that. We had to change routes, and we had to change disciplines in the business on how we determine price points and how we sell. And we were happy to lose volumes as a result of that and fix the core business and the disciplines around pricing. We've also seen in the last year quite a bit of inflation in some of the products. Rice, for instance, last year went up 30%, the cost of raw materials. But to answer your question better going forward, we can see in our current trading, we in volume increased territory. And the things that we have to get right and that we are busy getting right in the business is to get our cost structures where we can have price points that the consumer is prepared to pay for. So you're 100% right. The consumer is under pressure, has been under pressure for a couple of years now. We do see in the macro environment that there's some signs of improvement. We can see with the interest rates declining, with the two-pot system, consumer confidence has really increased if you look at the measurements. So we do think the consumer environment is going to be better in the next year or two. But on top of that, we must really get our price points compared to what you've mentioned, dealer-owned brands, our competitor brands, where the price points is of such a nature that our consumers will prefer our products ahead of our competitors. And the turnaround you see is as a result of that, plus many other things. But I can give an example of in our colouring business, our turnaround in the second half has been quite significant. And a lot of that is around getting all gold tomato sauce, Cross and Blackwell mayonnaise, Mrs. Ball's chutney, to get those products on the broadsheets, on the promotional activities of retailers, and getting them on the shelf at the right price. And then the consumer will buy them. And we can see that at the moment that's happening.
And so we saw a bit of pressure on the domestic front, but the export market and international unit faring well. Just take us through some of the driving forces on that front.
Yeah, our export business has done quite well the last 18 months, 2 years. And I think that's as a result of the strategy that we've implemented about 2 years ago to go to neighboring countries in a focused way, appoint distributors that we think can do the job for us, and all of them are proving they can, and actually supporting those distributors strategically so that we are more involved in consumer propositions in those countries. We assist our distributors in marketing activity, customer support, stock level management, price points, etc., and we can see the fruits of that. In countries like Mozambique, Zimbabwe, Zambia, Namibia, Botswana, and all these export countries, we've really done well over the last while, and we will continue to do so.
Tjaart, just before I let you go, now the group is heavily invested in the informal sector. Given the recent crisis in that industry where, we've had over 20 children pass away over the past months or so after consuming poisonous products from certain spaza shops, leading to, community uproar and calls for tighter regulation. How has this impacted, if it has, Tiger Brands' investments and partnerships when it comes to, securing partners within that spaza shop environment? And perhaps, are you seeing shifts in the market where consumers are losing a bit of confidence within the informal sector and opting to shop at, your well-known retailers?
I think there's a couple of things you've touched there. The first one that I would like to reply is that we have got regulations for this. It just doesn't get applied. And authorities have now started to apply those regulations. Food safety for us is not negotiable. So if food is not safe in these shops, we must do what we can to make it safe. Tiger has done a lot of work over the last number of years, and we're very involved in quite a few industry programs where we try and make the spaza stores a safe environment for our consumers. The second point I'd like to make is our products that we drive. We've got there's barcoding that you can look at them. There's sell-by dates that we put on all our products, and we educate and try to educate our consumers and our customers, the spaza store owners, to actually look at that. If you get by sell-by date, you must take it off the shelves. So we're doing that. So we welcome any activity that will make food safety or put food safety at a higher level. Now, if I can add to that quickly, I think as soon as these things happen, consumers tend to come back to the trusted brands, brands that they can trust, which is ours. So that's in our favor. That suits us. I do think if you look at the stuff that's happening at the moment, we will probably have in the short term, and I hope the short term is a couple of months, not much more than that. We'll have a bit of iteration on how we solve this and how the inspectors go about inspecting it and closing stores or not closing it or helping them to register. I think we'll have a bit of issues when we do that, but I think a couple of months from now we will be back trading. We can see in our bakery business, which is delivered to these customers every single day, that there is a bit of an impact. It's not that big. We're comfortable to help, and we're willing to help wherever we can. And the industry does that as well. It's not only Tiger. But we foresee this with a good outcome over time so that we've got food safety in the country, and we support that.
Tjaart, thanks so much for your time and just taking us through the year that was for Tiger. That was Tjaart Kruger, CEO for Tiger Brands.